So, welcome to the 788th meeting of the Economic Club of New York. I'm Barbara Van Allen, President and CEO of the club, and it is a pleasure to see everyone here. Before we begin, I want to extend a warm welcome to students joining us virtually from Fordham University, Columbia University, and Rutgers University. A special welcome and congratulations to members of the new class of fellows joining us for the first time today. We're delighted to have you here. On behalf of myself, our Board of Trustees, and the membership, we look forward to an exciting year together, engaging in special programming and embracing the opportunities ahead. As many of you know, the Economic Club of New York is the nation's leading nonpartisan platform for discussions on economic, social, and political issues. And for more than a century, this club has been a platform for thought leadership and dialogue. Today, we're privileged to continue that tradition with our distinguished guest, Robert Smith. Robert is the chairman, founder, and CEO of Vista Equity Partners, which invests in enterprise software, data, technology-enabled businesses. Vista currently manages equity capital commitments of over $100 billion and oversees a portfolio of 85 software companies that employ over 100,000 people worldwide. In 2023, Vista was named Global Technology Private Equity Firm of the Year by Private Equity International. Robert was named one of the Time 100 most influential people in the world and has been recognized by Forbes as one of the 100 greatest living business minds. Robert serves as chairman of Carnegie Hall and sits on the board of directors of the Business Roundtable. He's also the founding director and president of the Fund 2 Foundation, as well as chairman of the Student Freedom Initiative, which works to ease the heavy burden of student debt for STEM students at the HBCUs and other minority-serving institutions. In addition, Robert and his firm Vista are founders of the Southern Communities Interface Initiative, a transformative program advancing racial equity across 6 key Southern communities that collectively represent half of the Black population in the United States. Today's format will be a fireside chat, and we're honored to have Yahoo finance anchor Julie Hyman as our moderator. Time permitting, we will take questions from the audience. A reminder that this discussion is on the record, and we do have media in the room and online. We will conclude promptly at 1 o'clock. Now, without further ado, please join me in welcoming to the stage Robert Smith and Julie Hyman.
All right, thank you, Barbara. Thank you all for having me, for having Robert.
Always good to see you, Julie.
Pleasure to talk to you again.
Always is.
So I'm going to start get straight to the plug, but this is a plug with purpose.
All right.
I want to talk a little about the book that is coming out later this year. It was just announced on Martin Luther King Jr. Day, appropriately enough, because it is excerpts from his speeches. It's called Lead Boldly, 7 Principles from Martin Luther King Jr. You contributed to this. It's going to be coming out on the 62nd anniversary of the March on Washington. That's August 12th of this year. How did this come together, right? Because obviously you have a day job that keeps you rather busy.
Yeah.
So what was the spark for this, and how did you get involved?
So I think I've got now a long and rich relationship with the King family, and in this case, Bernice. And I think people know part of my journey started as an infant in my mother's arms at the March on Washington for jobs and freedom. And in that context, we thought it might be interesting to parallel his speeches and how my life was affected by his work, was affected by his moral compass and its impression on the American psyche and the American economy. And, a person who is a beneficiary of the work that he did and the receptivity of his perspectives as being, African American in this country in this time, enabled me to be really the first generation of African Americans to have all my rights in this country, and what that can lead to, and my impressions of that. And so in each of the speeches that we selected, I would give a perspective on my life at that time, what was occurring, and the opening up of educational opportunities and workforce opportunities, and how allies are critically important for our country to advance. And as we continue to face ever shifting landscapes of values in this country, how African Americans have to really adapt, but also to lead, and to lead their communities, and to lead the American psyche as to what is the right way to move our economy forward, to make it more of an inclusive economy, because we cannot survive if only part of the American engine is prospering. We have to get all of the engines firing effectively, especially in the age where compute has now been distributed so broadly, and access to this capability is going to enable other countries to utilize their citizenry more effectively. And we have to make sure our citizenry is very much engaged in the process of economic prosperity. Those are things that are important that we outline in the book. And like all things, a number of Saturday mornings were spent before the kids wake up on phones, kind of pulling together the materials, and how each of those are reflected in my life from the speeches that he gave. So it was actually quite a fun and reflective experience. It's rare I really get a chance to reflect on my life at that depth, and it was very meaningful to be able to put this together.
I do have to ask about timing. I'm sure it's been in the works for a while. You and I have been talking now for a couple of years. We talked about the sort of legacy following the killing of George Floyd, what that meant for Black Americans, kind of the ripple effect from that, which now seems to have, I don't know if it's stopped, it's ebbed, the ripple effect from that, I think we can say. With a book like this, do you hope to extend that wave a little bit, or what, how are you thinking about these issues in this current environment?
Yeah, I think it's really to bring to bear the importance of including all Americans in the economic opportunity that is America. The diversity of America is absolutely, our unfair advantage in the world. And we need to lean into that unfair advantage. We have people from all over the world, backgrounds, experiences that contribute to the businesses that we run, the enterprises that we start, the opportunity to drive the world forward in some very creative and expressive and exciting things, technology being one of them. And we all know that, a wider aperture of perspective in addressing a problem increases the probability of returns and lessens the risk in those businesses. And so that's our unfair advantage. When I look at our development teams really around the world and in the US, I mean, there are people from all over in all walks of life in some respects, backgrounds. And I think that's what we really need to lean into as Americans. So it isn't necessarily tied to event, but it's just tied to the fact that we need to engage all of our citizenry. There's other countries which have multiples the sizes of the populations that we have, but they're not as diverse. And if they have access to the same compute that we do, but they don't have access to the same perspectives on how to utilize it, then they will be more narrow in what they can accomplish relative to us. And so we have to understand that in the world of AI, you've got to train these models really with the broadest perspective as possible. And you're not going to get that if you don't have a broad coalition of people at the table, in embedding these models with the information or insights or the aperture of where we need to go capture those insights.
Let me ask this in a little bit more of a pointed way. You said we need to lean into that. It doesn't feel like we're leaning into that in this current moment. is the pushback against DEI initiatives putting us at a competitive disadvantage?
I think if it is, short answer is not everyone is pushing back or pushing forward, right? I mean, there's both. I see some executives like we all have to adhere to whatever the law of the land is, and we're trying to understand what that is, right? And we've got to figure out what is that equilibrium state and when it settles, and that's not completely clear, but we do know that the sentiment for some of these programs and the way that they have been articulated, not necessarily executed, but articulated, has created some massive, pushback. All that said, America should be a place of meritocracy, but not just meritocracy and advancement, meritocracy and opportunity set. And we only have 370, 380 million people, and if we exclude wide swaths of the population, this, I mean, 63% of the, call it DE&I recipients were white women. Okay, you're going to not include them. Okay, there's people you're going to not include them. No, you are. I think people are just maybe offended by the way that certain of the programs were administered. But from what I can tell, most of the executives that I deal with are saying, yeah, we have to, adhere to the law, but what we're going to do is ensure that we hire the best people for the jobs that we can, for the jobs that we have and the best people we can find. Well, that's not going to be a narrow focus. You have to have a wide focus because people have now been educated and have opportunities. And so the best people are very diverse now relative to what it was maybe 40, 50 years ago when people didn't have access to education and educational opportunities to enable them to be successul in the workforce. So that's how I see it.
And that's how you're approaching it at your company and your portfolio of companies.
We have always focused on, in all of, we got 121,000 employees around the world. We do aptitude tests and personality profiles, and it's like, okay, this is a good person for this particular job. That's what we focus on. I kind of don't care what they look like, where they came from, but are they well equipped to be successful in that job? And that's how we've always approached it.
Let's talk a little bit more about your business, because Vista, 25 years.
Yeah,
having an anniversary this year.
Yeah.
So this was really the first investment firm focused exclusively on enterprise software. That is your place in the PE market. And a lot has changed in 25 years, obviously. We could probably spend the whole time here today talking about all of those things that have changed. But I guess I would just ask, investment opportunity-wise right now, how are you thinking about that in this current landscape, given that 25 years of experience?
The thing that we do at Vista, I think uniquely or better than most, is to understand that the world that we live in enterprise software is a world of constant change and constant flux. 25 years ago, the vast majority of these companies were on-premise. I think we converted more on-premise enterprise software companies to, what we think about as hosted or, SaaS is how we think about it than I think any institution on the planet. We are now, of course, in the major pivot from how do you convert those businesses to Gen AI enabled or agentic as a final state, and building the infrastructure around that. So we're just used to change as our modus operandi. And so part of what we do is build infrastructure and capability to do that effectively at scale. And for us, that's what leads to this massive opportunity that we see before us now, which is Gen AI or agentic. Our average company today, where we sell products to our customers, so portfolio companies, a 600% ROI, return on investment, for the products that we sell our customers. When again, 100% of our companies now have some form of code assist, Gen AI enabled code assist as part of every single one. 95% have some Gen AI enabled product in the market or under development. And there's about 21 aspects of how you run an enterprise software company where we are using solutions and testing them across all of those aspects, functional areas from contract administration to customer service, that we're driving across all of the businesses. Now, so when you think about this in aggregate, I've got, call it 89 companies. I've got 89 laboratories, in essence, where we can test different products or solution sets or methodologies and then figure out, okay, this is great for this one. Let's populate it across these 7 or 8 or 12. That's our motion. And that's just how we operate every day. When you now look at the impact of what this new technology is, that 600% ROI, we're seeing orders of magnitude in some cases returns versus that. Okay, so it's a massive opportunity, but you have to get there. You have to build the infrastructure and the teams to get there. Now, some of them aren't going to be as high an inflection point. In fact, it actually creates some risk for others. If you don't have what I call the sovereignty and dominion around the workflows and the data sets, I will argue in a fully agentic world, you don't necessarily have a right to exist as a company. And so you have to understand that level of risk and how do you deal with those companies in that context? What can you do? And how can you do it so that you then have the ability to create a unique advantage that only that company can bring to that marketplace? So that's part of it. So I think there's going to a large part of our existing asset base will become agentic. There will be another part that becomes an ability to run at very high profit margins because of the productivity that we can bring across the operations of those businesses and return. Beautiful thing about enterprise software, returns free cash flow. Okay, if it doesn't have the CapEx drag like a lot of other businesses. And so operating those businesses in that construct creates a whole different methodology for returning capital to our investors. Mm-hmm. So that's how we're really organizing ourselves. And that is like, the pivot that we've been driving, for the last 2 years, since really almost 3 years from the introduction of what is this new general purpose technology that we're all trying to understand, and for us B, embracing wholeheartedly across all the elements of our business, including how we run our firm.
When you talk about sort of justifying your existence, is that a concern about commodification of these AI capabilities?
It's so in certain environments, again, if you don't have unique, I call it, really sovereignty and dominion around workflows and data sets, models can be trained around them that make whatever you have, superfluous. You don't need it. You can actually affect that function. The good news about the enterprise versus the consumer world is, there's a precision that is required in the enterprise. Like you and I would not be satisfied with the 99.5% probability that the wire transfer going to you goes to you. You want 100% every time. Yeah. And so that's why you have to have an environment where if it's agentic, where you have 100% precision, which might require some governance structures or some intervention, not only from an agent or an individual, a human, to manage that. But in doing that, if a human today is doing that job, that person is doing, I don't know, you can argue 8 hours a day, 6 hours a day, 4 hours a day, whereas agents can do this 24/7, 365 with a higher degree of precision. But that precision is driven by what actually exists in the environment that day, which are the actual workflows, what databases are they updating, in what frequency and in what order, so that you can actually have that 100% precision as opposed to 99.5. So the architecture around that is an important part to get right in the enterprise. And then building out, call it the task associated with the agents, and then what is the administrative agent on top of that. Those are important parts of doing that effectively in an enterprise, which you don't necessarily need in the consumer. You and I as a consumer may say, book these 3 restaurants, and there's a certain precision that you care about in that world, and there's a certain precision you kind of don't. Yeah. Right. So
all of that sounds like it will require fewer people. So you said what, 121,000 employees, and recognizing that your portfolio changes all the time.
Yeah.
But say it stays static. Can you grow over the next 5 years without hiring any more people? Do you need to hire any more people? If we're going to see, this is something I feel like is like the third rail, and a lot of the executives we talk to, they say, "Oh no, we'll need more people." Really? If AI is going to be increased productivity as much as everyone is saying, how in the world are you going to need that many more people?
You're going to need different people. Now, do you need more? It all depends on your growth rates and where you're going and what the opportunity is. I will tell you, with one of the companies that we're focusing now, the TAM, total addressable market, is about 7x if you agentify this business from what it is today. Can you manage that with the same number of people? I don't know. All logic says you probably need a different type of person, because you will. Did you need more? I don't know, because I can't tell you. But I can tell you in certain instances, very simple things like customer service areas. One of our companies, they were able to deflect now 40% of their customer service calls. And as a result, said, guess what? We can reduce 32% of our customer service agents. Okay. And this particular CEO is very exceptional. Was kind of figured out, well, guess what? I figured out going to a different construct. I won't tell you what it is. It's like, I think I get to 90% deflection. Okay, so now you can kind of populate that across all the portfolio companies, and what's the economic impact? In some cases, well, the company may not be that big, and they, all right, you can't reduce 3 people in customer service because the company's not big. Or in other cases, they have 1,500 of these folks. You may not need all 1,500. That said, you do need a different type of person in certain of those environments, and depending upon what the growth rates and ambition plans are, you might say, we're going to now move this into a completely different country and be able. So you need those sort of efforts. You need people who are focused on building out the right sort of governance and prompt engineering associated with that, and to ensure that you get that 100% precision. The architects, the software architectural dynamic is very different if you're building on an agentic stack than you are what we have been termed as called a client server stack. A very different stack. So it's a different set of people that you will need in that construct. Now, all that said, I will tell you there's about 1 billion knowledge workers out there who make up about $40 trillion in spend globally. And I will tell you that those jobs are at risk. Not all of them to that degree, but they are at risk. Customer service agents, absolutely at risk. The agents will be augmenting a lot of what they do. And in some cases, those agents will do what they do. And you can actually deploy multiple agents in some case. And now it's a question of the cost of compute versus the cost of individual. But Moore's law will dictate, just like what we've seen in the last couple of weeks, that cost will come down over time for the inference capabilities.
I want to talk about deals a little bit. I was looking at the last few years for you all at Vista, and 2024, I mean, for a lot of companies, but for you guys was slower in terms of returning capital to investors and in terms of deployed capital versus the past couple of years. And we've been talking to a lot of folks this year who think everything's going to be unlocked, right? That thing, you have deregulation, it's going to open things up. At least that was the view 2 months ago.
Right.
That view seems to be changing a little bit. We've seen, everybody was waiting for the IPOs that everybody's been waiting for to finally come. Well, maybe that view is changing a little bit now. How is this year going to compare?
A couple things. If you look at 2021, 2022, that time frame where we were kind of in the thralls of COVID, and it's interesting, a number of companies and businesses were blind to their customers in some respects, through the supply chain, to their employees, because everyone went home and just like, oh my gosh, I don't really actually have the software that I need. And so there's a massive pickup in consumer demand, or business demand for enterprise software in particular. And then as we came out of that, and we'll call it a little bit of a tech wreck that occurred, but that was actually a resetting. So we went from multiples that were kind of 7 times, if you want to think about it, to 17 to 20 times. And fortunately for a lot of people, they put a lot of capital work during that era, 21, that 21 vintage. We throttled way back then. And then as the correction came, we deployed a lot of capital in 2022, 2023, and into 24. I think, flagship, I think we took 6 companies private in that period of time at those readjusted multiples. So I'm very excited about what we did there. And then the private markets started to capitulate as well, because private companies, when the market goes up, they're worth this, and the market comes down, they say, no, I'm still worth this, right? But it takes a little while. But that is now, that private market capitulation has now happened. So it's a really interesting and good deal environment from that perspective. With all that said, strategics were very much on the sidelines. The last administration and the way that they approached strategic deals made it almost impossible for very large companies to buy other, reasonably sized companies. And we're in the business of building and developing reasonably sized companies, shall we say, that we actually sell into the marketplace. There are now about there are six strategic activities that have now restarted, where people are interested in those businesses because they think they now have an opportunity to affect transactions. I don't know, is that my phone buzzing?
I don't think it's my phone.
It's probably Alan sitting in the front row here.
Alan, silence your phone.
But I think that will open up the IPO market. We're starting to see a few glints of it, but I'm not quite sure that's sustainable. You can ask a bunch of capital markets folks. I'm not quite sure that is sustainable. The VC market that we're seeing, everyone's pivoted to AI, which is, and so a lot of the enterprise software companies aren't getting the capital that they need. So we're starting to see much more M&A activity in that side on a buy side perspective. And of course, we're now seeing, beyond the strategic, some of the financials looking to deploy some capital in some well-run companies, which, thank goodness we have a few of those to evaluate. So I don't think it is going to be as robust as people thought 2 months ago. The interest rate environment hasn't changed in ways that people were hoping as quickly. And I think, and that's going to obviously have an effect on whether or not transactions and financing for these transactions will advance. We just saw an announcement from a major investment bank yesterday that's really going to start to go into kind of the private capital credit fund areas, and I'm excited about that. That's going to create a lot more liquidity in that marketplace. I don't think it's going to be as slow as 2024, but won't be as robust as what people thought it was going to be in January of 2025.
Well, and some of the signals from the administration have been that it's not necessarily going to be that dramatically different in terms of deal approvals as the last administration.
We're hearing that as well. We'll have to see. Like all things, proof of the pudding is always in the eating, right? So we've got to see what is the new equilibrium state. But I think strategics are now saying, okay, it is a good time. They've been holding off. It is a good time to now bolster and build their capabilities. What we are seeing, again, my world is enterprise software, so that's kind of where I really focus. Many of them are seeing businesses that are going to be additive to their market position, additive into, in many cases, their ability to expand their addressable market for adjacencies, and in some cases, the ability to, in our case, bring in companies that are more Gen AI enabled than what their businesses are. And I think that's going to create some really unique capabilities where it's like, okay, they are doing this. Can we take that and populate that across our business? Because we've been able to do it because some of these companies are much smaller than what the strategics are, which is why these are interesting transactions for us. And that's where they're focusing on, okay, how do I now take this wherewithal, this know-how that you're doing, and now bring it across my organization to make sure my organization can survive what is this new transformation to a Gen AI enabled digital economy.
So there's all of this going on in your world. There's a lot going on in the world of AI, and then there's the bigger world and everything that is going on. Right. And I'm wondering about the implications for you. I mean, specifically, I'm curious if tariffs are going to have an effect on your businesses, on either the stuff that you're trying to sell or things that you're being supplied with.
It doesn't really hit us today in terms of the enterprise software world.
Right.
And even if it hits, in some cases, I'll call it the silicon substrate parts of the world, we typically are users of that. And so a couple of things have happened, Julie, which have been interesting. So first of all, we don't see it or feel it effectively in the world of enterprise software. But what has changed in the last 15, 20 years is, remember, technology, the purveyors of it for decades were all US companies. The distribution of compute has changed everything. And so now it's not just a few hyperscalers. You now have sovereigns who are becoming hyperscalers in intent and in desire to provide that infrastructure and the utility of that infrastructure, not only for their own use, but in a broader sense of use, becoming true general purpose technology providers, i.e. inference capabilities, and some are thinking even bigger and broader than that. That has changed the cost curve. That has changed the accessibility curve. And so depending upon how we work through the latency issues, you will potentially be able to access compute anywhere on the planet, depending upon the use case. You may not want compute from across the world for your driving application, but in processing a property and casualty insurance claim, if that's the lowest cost, then that's where you go, right? And I think, and so because the connectivity enables that to happen, so certain parts of the fabric of what we've built over the last 10, 15 years, that utility will continue to drive costs down, that will eliminate the ability to, or the impact, I'll say, of any sort of tariff activity around that.
And what about sort of trade tensions more broadly?
Yeah, it's going to be interesting. I'm heading off to Asia in a couple of days. This is my first trip there since the new administration, and I am, and I can tell already from the questions coming in from the folks I'll be meeting with. I meet with ministers and economic entities for these countries who have an interest, of course, in participating more fully into the digital global economy. Some of it's for their own use, and some have some broader ambitions around it. And many of them are wondering, okay, well, what is the impact in our world, and how do we deal with this new administration?
So what do you tell them?
Well, I think you take lessons for what people have been successful at. What do you see? Do you see people going in and they're bargaining? Right. They're going in, and it is it's a bilateral bargaining agreement. It seems like that are occurring. Okay, here's administration feels this is some area that we think we've been wronged as a country, and you all have taken advantage of us. So what's the new bargain, right?
Yeah.
And I think some of these global trade agreements, I don't anticipate, but again, I don't live in that world. I just I'm a participant in some respects. Won't be ultimately what governs those relationships. I think they're going to ultimately be bilateral, a whole series of bilateral agreements, but we have to see where this new equilibrium takes us. You just saw, Macron come in and have some perspectives, and you saw the Canadians come in, they have some perspectives, and Mexico's going to have some perspectives. And, if this deal with the Ukraine goes through, that's a whole different construct, right? And you think about it as, those give and take agreements will form, and then business people can then now have some constructs in which they can navigate through how they're going to affect their businesses. And I think it's going to be important that these leaders get together with our leaders and convene and understand what the state of play is, and how they can fully participate in how we affect the global economy. And I think that's going to be essential. It's going to have to be a whole lot of communication, a lot of meetings, and I think there's going to be some bargaining agreements that get formed, and then we'll navigate from there.
Are you worried about Doge? I mean, surely you guys must have government contracts, right?
We don't have a lot. What I am actually excited about there is we all want efficiency in every business. And we are, we focus relentlessly on efficiency in our businesses. And it is probably a good thing to focus on efficiency.
Is efficiency getting rid of whole departments wholesale, or firing thousands of workers?
I don't know. I mean, like all things, you got to start looking at the data and, okay, what is actually occurring? And you hear data about, 26 million people getting paid Social Security who are over 100 years old. Okay.
That's big. Yeah. Okay.
Well, I mean, somebody should validate that, right? And if it's validated, it's like, well, something's wrong. Because what I understand is only about 100,000 people over 100 years old. So there's something wrong there. It's probably between 100,000 and 26 million. And there's some inefficiencies. Now, if checks are being written, who are they going to?
Well, I'm not a computer programmer, but it was my understanding that if there was no date of birth in the system, it defaulted to too far or whatever, right?
There's all that in computing. But then you got to go do the work. Okay, and you got to go figure it out.
Right. Is that work being done?
It has to be, right? Otherwise, first thing you say, well, you have to. But if you don't, we didn't have that data 6 months ago, did we? But we have it now.
Well, somebody had that data 6 months
Well,
ago.
I'm not sure they looked at it. Who knows? Maybe they did, but they didn't do anything about it because why would, if you knew that it defaulted to that, why wouldn't you create an effort to say, okay, this person was actually born in
Let's
1954.
fix the system.
Yeah.
Right.
Okay. So that's why I mean the efficiency makes a lot of sense to go in and look at it. Now, the approach may not be an approach we all agree with, but at least it is something that we need to we need to have more efficient government for sure. Is this the right way to do it? I'm not sure. Again, I'm not focused on
Right.
that. Okay. But what I do know is when we bring efficiency to our businesses and we're evaluating, we do find those sorts of things. It's like, well, that didn't make any sense. And this is, something that got written in some code 8 years ago and nobody has changed it. And as a result of that, you've been, the ship has been leaking. But you need to, our digital infrastructure in our economy now, here's a good way to actually kind of get after that. So, I'm in support of us figuring out how to make the government more efficient.
Right.
No question about it.
You guys are still the parent of cloud software.
We are.
So the CEO there, of course, is working 2 jobs right now, I guess. He's running.
He's on leave for a little bit.
He is on leave. Okay, well, that's what I wanted to ask you about.
He's
So
not
that's
actually on leave. He's just working on that.
right.
project.
Well, that's
Right.
Tom Krause. So he's
Yeah.
a sort of special government employee, for those of you who don't know, who's
Right.
on loan to the Treasury Department and to Doge,
Right.
even as he heads up cloud software. How does that work? How do you make sure, even if you don't have that many government contracts, how do you make sure that there isn't a conflict of interest or an appearance of conflict of interest? How do you make sure that he's serving your interests
Yeah.
while still doing his government duty?
There are only 3 software companies of size at over 60% EBITDA margin. He's been associated with 2 of them. One is Broadcom, one's now Cloud Software Group. He is one of the most efficient people that I've ever seen in my 25 years of running Vista and 35 years in this industry in actually understanding waste in systems. And if I were to pick one person to evaluate waste in a large scale infrastructure, he would be that one person. So I think we should all feel proud and privileged that he is actually on loan to go look at this and come up with, okay, here's some methodologies to evaluate it. Tom is one of the most precise people I have ever met and relentless in that regard. And I think he will deliver what is the truth of what things are in that department. And what the administration does with it is what they're supposed to do with it and however they want to treat it. But it's important, I think, that we bring people who have experience in bringing efficiency to operations to evaluate, who have no, call it, motivation beyond how do we make this as efficient as possible. He'll present the data and people have to make decisions against it. Right. And he is amazing at that.
I mean, there are some critics of his time, particularly at Citrix before, who said he cut too much, right? That operationally, I guess there are always going to be folks who say that kind of thing, right? But how, I guess it's the question of, is it a hatchet or a scalpel, right? In these situations.
You often have, in that case, one measure of performance is not just the operation of what the net promoter scores, which are up. So people say, oh, we cut too much. Okay, but we got a higher customer satisfaction. Okay, we have more profits. It's growing faster. Net promoter scores are up. Maybe some people who got cut were unhappy about it. Oh, I got cut because I always read, I always get the articles, as you know, of the people who got cut that say he cut too much.
Right.
Yeah, because he cut them. Right. I mean, that's what you see.
Right.
And you get the reports.
Or the people who are still there who say, in some cases, my job is harder to do, or things aren't working as well, at least in the short term.
Yeah, and there can be that. Then you go like all things, and you put out recs and you add back. So it isn't like, oh, you cut and you never add back. I mean, and again, jobs also change and responsibilities. And the good thing about technology also, it evolves. And you start thinking about, this is a new infrastructure which eliminates the need for that whole department. And so you should do that.
Right.
I mean, we are stewards of capital. And what we have to do for our investors is say, this actually is, I always say, one of the reasons we can afford businesses in some respects is because they aren't being run as efficiently. And so what we bring to the bear is a view towards, how do you run these more efficiently in ways that we've done it in the past? And in some cases, we need to change this operation or change the way they do things. And like we just talked about, this whole customer services support. if I can eliminate 30% of the customer services organization with the new technology and drive that for my stakeholders, should I do that or not? Well, I have a fiduciary duty to do it.
Right.
Right. So that's the approach that we should all be taking in how we run our businesses more efficiently.
Let's turn to philanthropy a little bit. And I want to talk about the Southern Communities Initiative, which Barbara mentioned in her intro to you. Give us sort of a progress report in terms of how that is going.
Yeah, so we are the key to this whole activity was, how do you enable communities to improve their condition? And when you looked at the African American community here, 70% of them did not have branch banks. And we discovered this. This is one of those, I say discovered, there's people who probably knew this all along. It became very evident to me during the COVID challenge that we all went through. And I had the good fortune of having a relationship with Steve Mnuchin at the time. And now they're going to start delivering these, PPP and, to small to medium businesses. And we own a company that actually has, software that sells to banking industry. And I was talking to our CEOs about it. And I'm like, well, hang on a second. And some of the civic leaders, well, our community is not getting any access to the capital. Well, why is that? Well, it has to come through the banks. Okay, well, great. And I called all the CEOs of the banks that I know, because I'm friends with them from BRT and other things. And they actually don't have branches in those communities. So if you're a small business in that community, you actually don't have a banking relationship with the largest banks, which is where the vast majority of the dollars were going through. Okay, like 90+%. So I called Steve. I said, there's a problem here because these communities won't have access to this capital. But there's an infrastructure that's in place. I call it a capillary banking system, which are CDFIs, right? Community Development Financial Institutions. And there's MDIs, which are minority depository institutions, that actually serve those communities and for loans and mortgages and all those sort of things. And they weren't actually tied into the systems to be able to distribute PPP. So I said, Steve, we need to help them. And he was just, and we literally talked every day for weeks and kind of once a week to update that whole dynamic. And one of the things you figured out was a number of them actually did not have a digital infrastructure to make these loans. One I always point to was, Hope Credit Union, where, Bill Bynum, who runs that, he was able to do 60 loans a year. And through digitizing his infrastructure, was able to do basically 1,900 loans in 3 months. Okay, and still has a higher repayment rate versus the FDIC average.
And why weren't they digitized before?
They didn't have the capital to digitize the training, and then ultimately, so part of it was we partnered with another kind of hyperscaler and said, listen, let's use some of our technology and just basically go build that out and enable them to digitize that whole process. Okay, now once you do that, you didn't have to be able to put capital into that system, and so that's really what that Southern Communities Initiative is about. Is okay, these are the 6 cities. And in those 6 cities, these are the CDFIs, and in digitizing those CDFIs, we'll be able to enable them to drive capital into those communities. And often there's $10,000, $20,000 loans to a business person who wants to, buy the building next door, or, expand their restaurant or expand their shop or whatever it might be. And they're the biggest employers in those communities. But if you don't have access to capital,
right.
Everybody thinks it's venture capital doesn't go in that marketplace. Yeah. I mean, this has to be some form of debt capital that comes out of those environments.
So where are you in that process of digitizing?
We are, I think we've got in the 6 cities, I think Atlanta is the first one that we now have, at the right sort of partnerships, and actually have now digitized, I think 8 or 9 of those. And we have another, I think 1,300 on the docket to go through and get done.
I want to do one more question, then we can turn it over to the audience here. The Student Freedom Initiative.
Yeah.
You got a lot of public attention back in 2019 at Morehouse when you said you were going to be paying tuition for folks or paying off the debt.
Yeah.
And that the Student Freedom Initiative sort of was born of that. So what is it doing now? Is it doing the same kind of thing?
What it is actually doing. So in all things, we learned in that construct how much student debt that these students have, and they actually pay that back to the government, because typically that's where it comes from. And so what the Student Freedom Initiative is focused on, and what it has done, is we've created what we call the income contingent funding. So by now charging that system with, now I think it's $250 million, we'll be at 500 when we finish that work. The students borrow from that, and then they pay back into that. That gets relent to students. So that's how that system actually works. And it's quite effective. I think we're now 92 different colleges, MSIs, which are minority serving institutions, and also actually 62, not 92, 62, I think as of today, and HBCUs. So that system is actually working quite efficiently. There's a little bit of an offshoot to that came that we figured out. There's two pieces. One was there's a housing crisis in a lot of these schools, which we found out about. And so we found some good partners here and said, listen, one thing that those universities often have, HBCUs, is land. And it's kind of, I call it unproductive land. It's kind of sitting there. And so we found some good partners to say, listen, we can build student housing, faculty housing, okay, their costs, they do a 99-year lease. The students go in, faculty go in, and of course they're paying for that, and that actually pays for that housing at a reasonable rate, and some portion of it actually goes through the Student Freedom Initiative that now use for the student loan dynamic. So that is up and running as well. I think we now are on 3 different campuses where we actually have houses built or in the process of being built, and 2 really good partners in that regard. So that's what I call systems that create I think an elegant solution to a somewhat complex problem of housing and student financing, so that the parents and the students don't have ridiculous student loans when they're graduating, and actually when they're paying it back, they're paying it forward to the next generation of students. So that's one thing we built.
And I know Barbara said there are students watching. Do they go to Student Freedom Initiative, to the website, if they want to find out more information?
They go there, and we have representatives on campus to walk them through it and all that sort of thing. So it's a pretty effective program.
Okay.
So excited about that.
I think we have like 3 minutes for one question. We can take 1 or 2 questions.
Hello, everybody. I'm very honored to be among your company. My name is Joleva Lefatzi, and again, thank you for the talk. My question, especially for the benefit of the students who are watching today, is, and not to harp on AI, but you did mention that for the future, we are going to need a different type of person. So I just wanted to hear from you, what is the, a generation or 2 from now, the children who are going to be graduating in 10, 15 years, what is their competitive advantage? I mean, how do we keep the human spirit, so to speak, in terms of, we're in an AI generation? Thank you.
Yeah, it's a great question. 2 generations from now, I don't know. I don't. The pace of change of this technology is more rapid than anything I have seen, and I've been at this for 40 years or so. Even yesterday, I was with our group advisory group, and going through some demos of, again, we have 89 companies, and every day someone says, "Oh, look at our new agentic solution," and I get the chance to see it. I was like, "Well, that's pretty cool." There's a whole different set of models that need to be understood as a student, and how you interact with them. Obviously today, 5 years ago, we would have been sitting here and I'm telling you, become a software engineer. Okay, 5 years later, I'm telling you, no, become a prompt engineer. 5 years from now, I'm going to be telling you to do something else. Maybe tell you to be a plumber. I don't know. There will be need for that.
You can't AI plumbing.
You can't, but you can AI enable what they should bring and how they manage it, because we have a software company that does that.
Of course you do. Of course you do.
What should you bring? What's the pipeline? Yeah, right. I mean, but it makes it more efficient, right? And that's when I talk about the TAM expansion and the efficiency is orders of magnitude in some cases in that regard. We actually have a company that does that. It's actually really, I saw the demo yesterday, but I think they're going to have to just be aware and really in tune with the capabilities of what this technology will bring. There may be in 2 generations a thought on how do you drive effective robotics to do the plumbing, and that is a job that will need to be done, probably. right? And it depends on who you listen to. Some are saying we need to move to some society that is a universal prosperous income society. I've heard that from a few of the, call it, foundational model leaders, and thinking that's ultimately the place where we end up. And that next generation will have to probably be thoughtful about that. But I agree with you. Importantly, we need to make sure this technology loves humanity more than anything else. We need to make sure this technology understands humanity, and not just the humanity of the 38 people who are developing it today. But you go to different places in the world. I was just at a conference, leading a conclave around it. You just think of things about, Asian medicine, Chinese medicine as is characterized. Okay, a lot of that information probably isn't captured, from what I know, in most of the Western models that we've seen. That is actually a quite effective way of treating ailments that you bring some of these systems against will probably advance, our medical treatment dynamics. So is that something so these kids should do? Go out and actually figure out ways to capture that information, and feed it into these models, and deliver that back into the communities that are interested in it. There's a whole series of areas that you can think about as a career professional. My job is to make sure it all gets built into our companies as quickly as possible. But your job as students, we have a bunch of Columbia Business School students here, so welcome. But also to also think about how you make sure that those systems are inclusive of different ethnicities and cultures and thoughts and philosophies in a way that serve humanity, not us serving, the technology. And I think that's what we need to focus on. Students need to focus on that.
Robert, thanks so much. I think we're
Julie,
out of
thank
time
you.
for
Yeah.
questions, unfortunately.
Okay,
Thank you so
thank
much.
you.